Box retailers are guiding lower despite a pretty solid holiday season. Joining us right now with some retail stock picks in this wild world we're living through. Michael Baker, DA Davidson Managing Director, Senior Research Analyst. Given what we're hearing from retailers, what do you like, what don't you like, and how soft or, how soft is it really right now for consumers?
Well, February does seem to have softened quite a bit, and we'll see if that continues into March. Some of that was weather in February, but some of it is what we're calling policy rifts, concerns and policy rifts. That's rates, that's inflation, that's FX, that's tariffs, of course. And so it is leading to a little bit of a slowdown in consumer spending after a really strong holiday season. That's why we're seeing that guidance for 2025 be a little bit low. So the names that we like in this kind of environment, which is really uncertain, who knows what's going to happen tomorrow with the policies, and every day it seems to changes. We think that there's a group of defensive names that have growth characteristics, and that's really what has been working year to date, and what we're sticking with. Those are names like Walmart. Those are the warehouse clubs, in particular BJ's, which we think is a little bit under the radar screen, reported a very nice number this morning. Auto parts retailers actually benefit quite nicely from tariffs. O'Reilly is our favorite name there. AutoZone has also been a good stock year to date. So that's where we're really focused right now.
What don't you touch?
Discretionary names that sell wants rather than needs are a little bit tougher right now. So we're sort of staying away from those, at least in the short term, and at least until we can get some clarity on what's going on with the policies, and who knows when that will happen. But to us, it's really about the retailer selling needs rather than wants. They have the ability to push through tariff increases. Again, that's the auto parts retailers in particular. Those ones are actually pretty interesting because as new car prices go up, people are going to keep their car on the road longer, of course, and that really helps the guys like O'Reilly in AutoZone.
When you say the wants rather than needs, where do you put like luxury in that?
Luxury to me is a want. And so, certainly higher-end customers who shop at those types of stores might be less impacted by some of these policy things, but nonetheless, we think those are, less favorable right now than the more needs-based retailers. Another name that I think is interesting here, maybe we're a little bit early, but is Home Depot. Housing is a little bit tough right now for sure, but most metrics we're looking at are bottoming in that if they're down year over year, they're down less, they're getting less worse. And in fact, some of the numbers we're seeing, refis, et cetera, are actually getting a little bit better.
Right. But what percentage of sales at Home Depot do you think are needs rather than wants? Meaning a lot of, Home Depot has succeeded in large part because people love to redo their homes and fix things. The things that need to be fixed are needs, but a lot of it is wants, no?
Sure, yeah. At least 60 to 65% of their business is break fix, and that's been pretty solid. The remodels, all those types of things, that's been pretty weak, but that's been weak for 3.5 years, really since the end of the pandemic. It's getting a little bit less weak, and in fact, this past quarter, they had their first year-over-year increase in big ticket, that's tickets of $1,000 or more, in about 2.5 years. So again, we might be a little bit early, but you're starting to see the end of the light at the end of the tunnel for what we think is sort of we call it a best in breed Bison name, a best in class type retailer that I think you really want to buy in front of what we think will be a turn.